Hello and welcome back to The Property Hustle. Now in today's episode, I will be interviewing my friend and fellow property entrepreneur, Kwasi Affum. Now Kwasi, besides being Vice President of Impact Assessment here at Barclays Investment Bank, he also manages to find the time to invest in property. In particular, houses in multiple occupation, HMOs as they are known in the property investing world. This is a particular strategy used by many investors to really maximise the returns you can get off of one single property. So hopefully, through today's interview, you'll learn how to use the HMO strategy in your own portfolio. Before we get started, please remember to subscribe and click the bell icon as well so you can get notifications every time I post. Now, without further ado, let's get into the interview. So Kwasi, welcome to The Property Hustle.
Wow, thank you for having me on The Property Hustle.
Thank you for making the time. Thank you for making the time.
I wanted to do this for so long.
You are literally the world's busiest man, I swear.
I don't go that far, but I've wanted to do this for so long.
We've been trying to arrange this. Oh, well, my YouTube.
I love your YouTube.
I love your podcast.
Yeah, I love your YouTube more.
We've literally been trying to arrange this for so long.
Yep.
But because you do so much, so obviously you work full time, which most people might not know, because of the amount that you're on social media. Sometimes I'm like, this guy has a full-time job in an investment bank nonetheless.
On top of other things.
So besides your day job, could you just briefly and succinctly tell us kind of all the other stuff that you do, outside of work?
Outside of work, okay. So
property related, if possible.
Okay. I mean, I always try to do this whole thing, which I call 360, which is try to make everything I do link together. So the property, other. One of my biggest passions is photography. And so that's really kind of start point. I started doing a lot of photography. I turned that into a side hustle business. I do photography on the side. Mm-hmm. I also do video editing, video production. Loop Media is the company. We do photography, media editing, weddings, property events, property. So if I like photography, I like editing. So I can do this and I can offer it as a service to people in property. And I do it for myself because I have a property business. Cool. What else? So I have this thing called Future Banking, which is non-property related, but it links because of something called PropTech that some people may be familiar with.
Yeah, I'm very familiar with PropTech.
So Future Banking is more fintech, which is similar to PropTech but different, and looks at things like the blockchain space, machine learning, AI, all the stuff which is futuristic in terms of finance. That's really what fintech is, and we do events, we do conferences. We did a conference in November for like 300 people, looking at how...
Which was awesome, by the way. I wasn't able to come physically, but the video and the amount of people that turned up, and I think it's so good that you're educating people on just finances, really, and being able to manage their money better.
And the technology provides new and great ways to do that. So I think that's part of the whole thing. It provides you with new skills. You can, people from all kinds of backgrounds can now develop new skills using technology and use technology to better their finances. Mm-hmm. And so Future Banking is one. Obviously, you mentioned the podcast. So slowmoneyclub.com is the podcast. And there I speak to all the people, including you. Your podcast is coming actually in January, I think.
Woo!
Yeah, so I speak to people in my property network. We talk about all things property, their journey, where they came from, what their origin story is, up to where they are now. And they normally share one nugget piece of specialist advice in what they've learned to help our listeners, our audience, and the Slow Money Club evolve, develop, and level up, really. So Slow Money, I'm probably losing track. There's always more. So
the reason why I actually asked you to be on the channel today is because you do a particular strategy that a lot of people want to know how to do, which is you buy properties and then you convert them into HMOs, houses in multiple occupation, and then you obviously let it out and maximise the returns off of those properties. So I wanted to know, of all the property strategies out there, why did you specifically choose HMOs?
Yeah, that's a great question. Before I get onto that, I just want to add one more thing that I do is around consulting property business owners in financial regulation. Okay. So this is around things like joint ventures and all of the risks and rules that there are around the space, and it's quite a changing space. So it's really important when people are doing joint ventures that they are aware of the regulatory landscape, and this is something that I help people with as well. HMOs, I mean, for me, I live in London. In London, it's very difficult to, the price of properties is very high. And so therefore, if you rent them out as single let, often the yield is very low, relatively. Gross yield is very low. And so there are many ways to look at this, but for example, one of the things that the PRA brought in these new rules around the time when I was starting to invest in property, and this looked at the Prudential Regulatory Authority, who I deal with all the time. For a split second, my mind almost went blank. Yeah, so the PRA brought in these rules around portfolio landlords and around stress tests for investing. And one of the ways that this translated was the rental multiplier. So lenders will lend you based on how much rent you're getting in, a multiple of that rent.
Yeah.
And as I say, so the property price is really high in London, the yield is relatively low, and they will lend you based on the yield, which means that the amount you get is quite low.
Yeah.
HMOs allow me to get double the gross yield, which therefore means, in theory, I can get double.
You can get more money. You're leveraging more.
Able to leverage more.
Yeah.
So leverage is really important when you're investing in property, because really capital intensive, really large amounts of money you have to put into it in order to buy. Everybody knows about the problem of getting a deposit.
Yeah.
It's even more if you're doing buy to let.
Yeah.
So one way to reduce that barrier was to do HMO. So that's one of the reasons. I mean, there were many reasons. I don't think there's one. But I guess so for example, like if I had gone some like sourcing, I wouldn't have had that problem because the barrier to entry would have been a lot lower.
Okay.
Complying with the rules, setting my sourcing business. If I had gone into rent to rent, similarly, it would have been a lower barrier because I would need to get a deposit, buy, pay stamp duty, etc. But another reason why I went into buying and holding, not necessarily HMO, was because my strategy is about ownership, not control.
Yeah.
So I wanted an ownership strategy.
And I think that's so important. As a newbie investor, you need to understand, first of all, what your time commitments are.
Yeah.
Because different strategies warrant different time commitments. But then also your long-term vision, which is similar to you. I have that ownership goal, actually owning the land on which the property sits rather than control. Sometimes you can do a bit of both.
Yeah.
Because the control aspect can sometimes get that cash flow going, which can then allow you the lump sum to then put towards the deposit, etc.
Exactly.
But yeah, so your goal was always ownership.
Yeah, so you hit the nail on the head. So sourcing wasn't, you mentioned at the beginning that I work full time. So the cash flow element wasn't necessarily a barrier for me because I have cash flow from my day job. And so there's different ways you can cook it. If I had quit my job to go full time in property, then maybe I would have had to do sourcing to maintain the cash flow in order to be able to do the other things.
Yeah.
So it's just about understanding your circumstances and what works with you.
Would you advise someone who is working full time? So I currently work full time myself and invest on the side. Hopefully, in the not so distant future, that will flip.
Yeah.
But for someone who is working full time, how can someone get into HMOs if they're working full time? Like how did you view the properties, offer on the like? How do you find the time?
That's a great question. I think people always use this. They'll come up with it like, I don't have the time. I work full time. I have a family. I mean, I have a family. I have 2 young children.
They're so cute.
Thank you. But so I have to dedicate time to them. I have to support them. I have to connect with them, and that all requires time and energy. And one of the things I would say to people is that we all have the same amount of time. Whenever people tell me that, oh, I do so much, I'm like, dude, you have exactly the same amount of time that I do. You can do just as much as I do.
It's just how you carve it up.
It's how you carve it up. And so for me, so to answer your question, like in terms of HMOs, my strategy is that my HMOs are all within 20 minutes drive of my house.
Perfect. So absolutely perfect.
That was clear for me that if I was going to do something, if I was going to do HMOs, which are labor intensive, and I wanted to be an owner and I wanted to be quite hands-on, they needed to be really close to me. So I drew a map. I got a map. I live in Harrow. You have Brent, Barnet either side. I'm right in the middle. 20-minute radius, and I only look on Rightmove
for that
in that area.
Cool. And so, do you set your Rightmoves and your other kind of property portals to that particular requirement, and then as the deals come through, you you follow them up, or do you ever kind of try and get in sort of direct to
Like
vendor.
again, to your point, if I wasn't working full time, wasn't running other businesses, didn't have a family, then maybe I would spend more time looking at direct to vendor. But the key thing for me is that automation is really important for me to be able to be productive. So I have all my alerts set. You know, when something that hits my criteria hits right and it comes to me, I don't need to go search for it. So it's more of a push interaction where everything gets pushed to me instead of me having to go and try and pull on all these leads to bring them to me. Also, but also because I'm not like trading large volumes, I'm buying and holding. It's capital intensive. I'm going to do maybe 2 projects a year. And so I don't need to be constantly going into the market.
Fine. Oh, that's very interesting. So let's get into the numbers, because I always want to know the numbers behind these things. So could you talk me through maybe one of your most recent deals or maybe your most interesting deal in terms of how much did you pay for it, what the actual refurbishment cost was to get it into an HMO, and then sort of what are your returns on it now? What's
So the most recent one, one of the most recent ones that I did actually was a property that I had seen at auction. This was one that I did. It was a really interesting story actually, because I went to the auction not to buy a property, but just to view. I'd never been to an auction before.
You came out with a house.
And I came out with a house. Yeah, so I went to the auction just to view. I was actually working from home that day. I was on my lunch break. I thought I could take an hour and just go see an auction and see what it's all about, because I'd never been to an auction before. And so I went, had a look, and then actually what happened was up came this house that I had seen before.
Okay.
So I talked
had you inspected it before?
Yeah, so I talked about my circle. This was a house that was right in the middle of my circle. I have other properties either side of the street that this house was on, and I viewed this house. Knowing your area is really important. I believe, I'm a massive football fan, but one of the best things everybody who watches football knows is home advantage. So knowing your home gives you an advantage. So here I was at an auction that I wasn't planning on buying anything at, but I had home advantage. A house came that I walked through. I'd been through the house multiple times, maybe 3 times. I'd offered on the house 12 months prior.
Oh, interesting.
Yeah, I offered on the house and they rejected. How much
did you offer for it originally?
The original price that I offered was I went up to 475.
Okay, 1,000.
475,000. I went up to. Yeah, I mean that was.
And that was rejected.
They rejected.
On what basis?
They had another higher offer.
Okay.
So I think on this one I started. Normally, what I do is I look at the house and I look at what I think needs to be done, how much I need to spend on the house, and then I basically figure out what the end value is of the house, and I take away the amount that I'm going to spend from the end value, and then that becomes my starting point until the negotiation.
Okay.
Plus or minus some discount, and I negotiate up from there. So I always know my top end, because I know that at 475, if I spend what I'm planning on spending, I'm going to get to an end value, and then that end value is everything. I can't really take money. Warren Buffett said, "You make your money when you buy, not when you sell."
Not when you sell.
So I needed to make sure that there was.
You have to work back. Yeah.
You have to work back. And so I'd already worked back. So I'm at the auction and the house comes up and I was like, oh, a nice house. And the auction starts going.
What did it start at?
About 275.
Okay.
Yeah, and I was thinking, this is like 200 grand less than I offered.
Yeah.
But I assumed it would go higher because at that point, everything in that auction had sold for higher than the guide price.
Was it towards the end of the auction day?
It was right in the middle.
Oh, okay.
Yeah.
Because sometimes it's nicer at the end when there's not so many people and you're kind of just bidding with yourself.
Yeah. This one, I mean, at one point, I was basically bidding with myself, but there was lots of people in the room. And so what happened was the house was going and we were bidding, and I didn't enter the bidding. I actually didn't enter the bidding until the auctioneer said going twice on someone else's.
Okay. So you almost wanted to gazump them a little bit.
Well, I wasn't even thinking of bidding, to be honest. But then at that point, I was like, wait, what? It's about to go for what price now?
Oh, okay. So then you. Okay.
Then I was like, wait. So bearing in mind, I'd offered 475 as my max, and that had been rejected. So now we're at the auction, and at this point, I think it was going once for 380.
You had to go in.
So I had to go in. So I put up my hand, and the other person came in for a little bit. It got to the point where I just kept my hand up because I was like, I'm going to get this house. Yeah. So then the auctioneer, he obviously realized what was going on and he gave up. I ended up paying for the house $395.
Wow.
Yeah.
So basically almost 75% 75k less than,
yeah.
and that 75k you can put towards something else or even the property.
I mean, in hindsight, actually, so this is when hindsight is 2020. That after the fact, having done all the work, done everything, actually, that price built in 75k was the difference. Because if I got it for the price that I got it for, it would have been a massive.
This is why I believe things happen for a reason. Like your offer originally got rejected because this was coming.
Because this was
what I mean? And you didn't let it fall to you. You just kept going and you kept learning about your area and you were there on the day.
And I kept the thing. I actually had the alert still on this house when I went back onto my Rightmove. I saw that actually it was on my Rightmove alert. So I hadn't missed it, or I hadn't noticed that it come back up under a different vendor going to auction because I just saw the picture. But I kept it up and, I just followed it through and I kept looking at this house and I could have just, forgotten about it. The other thing I would say as well when it comes to the properties that I look at strategy-wise is that actually almost every property that I've bought has been a probate sale.
Okay.
And so...
Can you just explain what probate sales are?
Yeah, it just means that it's being sold by the executors of an estate because the legal owners has passed away. Mm-hmm. And so when that happens, it has challenges and rewards. For example, this house, one of the challenges was that they rejected my offer because the family couldn't decide. They wanted someone else's offer because they wanted slightly more money. But they also knew that that person was less likely to complete. So some of the family wanted to accept my offer, someone wanted to accept the other offer. In the end, they accepted the other one. It fell through. They could decide. They decided to put it in auction. And then they ended up losing 100 grand on the offer.
It's interesting that it didn't come back to you as the underbidder.
Yeah, again, I probably blame the estate agent for that because I think that the estate agent should have come back to me, but they didn't. Probably, actually, if I recall, the family didn't go back to the estate agent. So after the first offer fell through, they decided to go straight to auction. And this is again when it's a probate sale and you have lots of different people. Probably the wrong decision on their part. If they wanted to get the most money they wanted, they probably should have called me back. I would have paid more. But so probate sales.
You bought it for
$395.
No, $395. How much did you spend on refurbishment?
As I was saying earlier, actually, in hindsight, what we did with the house, it was a 3-bed terrace, and we turned it into an 8-bed.
Wow.
Yeah, so we did a loft conversion, put in 2 bathrooms and one bathroom and a bedroom and an ensuite in the loft. And then we did the rear extension and we basically gutted the inside and started again from scratch. And
did you know you would get permission to do all of that work? Did you have an idea, or did you kind of go in with that as being a risk?
Coming back to strategy, my strategy is that I make changes within permitted development. So I don't take the risk of planning in order to mitigate. I don't need to know whether I'll get planning because it's under permitted development. So we spent probably in the end so a lot of stuff in this house that we didn't expect. We didn't expect that we'd have to take all the walls down. One day I went into this house and there were no walls in this house. It's such a surreal experience when you walk into a house with no internal walls. So we had to take all the walls down, which ended up costing us a lot. The house, as it turned out, although there was a brand new boiler, which totally deceived me, didn't have a gas supply, gas mains coming into the house, which I never really understood. And as it turned out, when we were doing this work, there had been a gas leak under the house, which had been persistent for as long as nobody knows, because there was an exposed pipe literally going under the house. And they said it could have been there for decades.
Jeez.
So there was lots of stuff going on.
Lots of good little hurdles for you to overcome. Yeah,
exactly. The long story short is that we ended up on that project, I ended up spending about 200k on that project. So they're paying about 400k, spending about 200 with a total purchase price plus cost of about 600. The upside is coming back to the end point. So the first time I went to see the house, even before when I offered 475 for it, and I said you start with the price that it's worth. That price I had in mind that it was worth was always I had in my mind 625 as the end value that I was aiming for, to refinance that. And when we did the job, refinance came back in at 650. So we were able to add more value actually than we initially thought. So on the back of that, obviously renting out the house, grossing about 50k. So Yeah, that was that project.
Okay.
One of the things to always bear in mind when you do HMOs as well is that, again, I'm talking about the gross values. You, as the owner, as the manager, carry the cost.
Yeah.
So you have to manage, again, all of the costs very closely. But at the same time, the reason why I chose HMOs instead of single lets as well was because I'm a businessman, and this is a business where I can manage the cost. I can do many things to manage the numbers, as opposed to single lets, but all you can do is increase the rent or reduce your mortgage payments. I can do both those things, and I've got everything in between. Reduce, go to a cheaper gas supplier, cheaper internet provider.
And once you've done enough, you get your kind of team of people, so it's almost, you kind of know the costs for each of the projects. You can look at a building and think, well, I know exactly how much it's going to cost because it needs X, Y, Z done, and I've done that on a previous project, and this is how much it costed. So you can, almost rinse and repeat.
And I think once you get to that point where you've done a few projects, I can now go to do a viewing, and I can walk into the house and walk out the house with a pretty strong idea of roughly what I'm going to spend. So I know my area, so I know what that top end gross value is, end value is. B, now I know roughly what it's going to cost me. I can literally do a viewing and come out knowing instantly whether there's profit or not in this deal.
And so if someone's going in to buy a property with the intention of converting it to an HMO, is that something you let your lenders know so that they can give you, lend adequately on it? Yeah,
depending on the strategy. So the way that I do it is I normally do something known as bridge to HMO, which is I use a bridging product to do the purchase, and I use a...
Do you want to just explain bridging finance for anyone that doesn't know?
Yeah, so bridging is a form of short-term lending.
Expensive form.
Expensive.
You've got to know the numbers are going to work.
Yeah. So bridging focuses asset-based lending. So they lend you based on the underlying asset and the price and the income versus you as an individual. So it's a different way of lending, and it's short-term. So as opposed to a mortgage, it's a term product, i.e. you take it out for 25, 30 years or whatever. Bridging is normally like 2 years, then you have to pay it back.
Okay.
So,
and is it the interest is rolled up, or are you paying on a monthly basis?
The various forms. That's a good question. Like a mortgage, you service the interest monthly. But bridging, often, for example, on this project, I used to use both. The first 9 months or so, it was interest rolled up, and then after 9 months, I had to service the interest, which is a lot. I think on the amount that I borrowed when I was servicing it, I was paying something like £4,000 a month, £4,500 a month in interest service for the bridging. But it allowed me to get the property, which I wouldn't have been able to get a mortgage on anyway because of the condition that it was in.
Exactly.
And it allowed me to be able to do the work because they also gave me some money towards the renovation works.
Okay. And so when you borrow that money through bridging, are you borrowing the value of the house plus the anticipated cost? Are you borrowing your all-in cost, or are you just borrowing against the value?
So bridging, again, is different. On this project, what the bridger did is that they gave me 100% of the purchase price.
Yeah.
But don't be fooled. They gave me 100% of the purchase price, but not to do the purchase. The way that it works is that they give you, the total amount that they were committed to giving me was 390k, but they gave it to me in stages.
Okay.
Which actually caused me a lot of trouble because after the auction, without planning to purchase, I didn't have any finances lined up. And I had 30 days, 4 weeks to complete on this purchase. And the bridgers, although they were giving me 100%, would only give me 50% up front, which therefore meant that I had to find half of the purchase price in order to be able to complete the auction purchase within 4 weeks, which I hadn't planned for when I went on my lunch break to look at this house. So I had 4 weeks to find 200 grand.
I'd be interested to hear what your wife had to say when you came back from work that day. I was like, I bought a house.
Yeah, it wasn't good. I could tell you that.
And we're going to need to find 200k in 4 weeks.
Yeah, exactly. Yeah, so she wasn't very happy.
Does she get involved in your property projects at all?
Project-wise, she does a lot of the, once the project is done, once everything's set up, once it's tenanted, she does a lot of the people management, as I call it.
Yeah.
She's very good in that sense. So if I need to get a builder, or if we need to get work done, she's really good with the people. She'll speak to the tenants. I'll find them and get them in and then hand them over to her.
Nice. I like that.
Yeah.
Business partnership.
Yes, very much so.
Awesome. So if I wanted to start, what would you say, what's the biggest lesson you've learned from doing this particular strategy?
I mean, I think the biggest lesson is probably probably more about the finances, to be honest. I think that the challenge with HMOs, as I say, is that it allows you to get more out from the on a lending basis, LTV, lending to valuation basis, out of the property. But HMO products are also different to buy-to-let products. So you pay more going in, you might pay more in fees, you pay more every month. So making sure that, and then if you have it on, like, say, a 2-year or I guess one of the things that I would have done earlier on is I probably would have fixed for longer.
Yeah.
Initially, so right at the beginning, I was only doing 2-year fixes. I got into a situation where I was maybe four years in, and I had lots of properties refinancing, and the refinancing cost as well. So
to switch products,
all at the same time, all of these things, and those costs all mount up and all need to eat into your profit. The other thing I'd say about HMOs is that people often think, they look at the gross amount, like I mentioned, 50k might sound great, that's gross. All it takes, as happens all the time, is for something to go wrong. So if I look at this project that I've done, it's cash flowing pretty good, but I can guarantee you that, at least in the first 12 months, stuff was going wrong because of all the new stuff we've done.
Yeah.
Stuff was going on quite regularly, to the point where probably the first 12 months after being rented was net cash flowing, because we had to fix plumbing issues or fix roofing issues, or, I remember there was one day there was like really, really big bad winds, and one of the roof tiles fell and hit the roof of the extension and broke the glass, which meant that we had to replace it, which is basically that month's profit gone. So,
Jeez.
Yeah, these are things you can't calculate for, that actually is going to be, mini tornado going on.
Exactly, but this is what I tell people: when anyone wants to get into property, regardless what strategy, you have to be prepared for these kind of, out of the blue situations that you have to just fix.
Yeah.
And because if you've got tenants in there, you have to do it.
This is the key.
A boiler breaks down, you can't wait, particularly in winter.
That's a great point. So I remember there was 1 year where boilers in 3 properties broke down. By the time I had 3 properties, and boilers in all of them broke down over that winter, and it cost about $2,000 all in to replace a boiler. So, that was a very challenging time when we were looking at profit margins.
And so, how many properties do you have now, if you don't mind sharing? And do you ever see yourself stopping, or is it, forever, buy?
Yeah, how many properties I have now, I don't mind sharing, but I think this is an interesting point, because people always talk about a number of properties. I work in finance, I work in banking. Nobody ever talks about number of shares. How many shares do you have in JP Morgan?
Yeah.
Nobody talks about the number of shares, they talk about the value. Whereas in property, people talk about the number. If I have 10 properties in London and someone has 10 properties in Stoke or Sheffield, they're not equal. They're not tangentially equal. So,
and you could have 10 properties but only own a 50% share in each of those. So
I always find the question about how many properties is a bit of a pointless question. Target-wise, I can't see myself ever stopping. I think that my strategy will evolve as I go. I think that one of the things I didn't appreciate when I got into property, using my strategy, is just how labour-intensive it was. I know lots of people actually within my network in property who are actually exiting HMOs.
Yeah.
And I've thought about it, and actually, probably going forward, I will look at that strategy and look at how I do HMOs maybe differently, because again, back to my point right at the start, luckily for me, I didn't come into this thinking I was going to make ridiculous amounts of cash flow like most people who go on a course and get sold.
Yeah, they think you're going to be a millionaire in the first year.
Yeah, so that was not my intention. My intention was to build up an asset base and also to be able to leverage those assets. So HMOs allows me the leverage factor, and that's the key thing for me. But failing that, if I'm honest, there's like a single let that we have, and that's probably, not only is it profitable, but if I look at time investment versus return, that's probably the most profitable.
Yeah.
Because literally nothing happens there for 2 years.
Until you have to change the tenant or change the light bulb,
They can change their light bulb. The tenants, I went there once, and the tenants like built a shack in the back and made themselves all at home, and I was like, oh, cool, good for them. They were happy there. That's good. The longer they stay there, the better it is for me.
That's my.
So I think HMOs can be deceiving. It's a great strategy. I do it. I enjoy it. But at the same time, I see a lot of people who evangelize it and make it seem like the holy grail. It's really not. It's really not. A lot of people, more people I know, are leaving HMOs than entering it at this point in time.
Yeah. So you invest here in London, within your 20-minute radius.
Yeah.
For someone who might be in London or elsewhere in the UK or the world, how do you assess whether your chosen area is good for the HMO strategy?
Great question. To me, it's quite simple because I know the area really well, so I look for the key things. We have the Civic Centre, which is basically the council, so we have professional employees mainly. We have the hospital, Northwood Park, which is really good hospital for teaching. Speaking of teaching, we have Middlesex University, which is also in the area. So there's not just the students, but the academia, which I think people often forget about when they look at
properties in sort of
university areas. Yeah, and then you have the local commerce. So there's lots of local shops, lots of retail. There's a shopping centre. I look for areas with those things really. If I can find somewhere where there's a high level of professional demand, mixed environment in terms of retail outlets, shopping centre locally, because obviously people need to work there.
Yeah.
People need to
Transport links into.
Transport links are very key. So actually, all of the properties, I should have said this first, all the properties have to be walking distance from the train station. Otherwise, I'm not interested. That's the first thing that I look at, is that it needs to be walking distance from the train station.
Cool.
So the other thing that not necessarily relating to when I look at Rightmove when it comes up, I like the properties with the least amount of detail on Rightmove.
Presumably, it means that inside is probably run down, and therefore you can sort of
do more to it.
Yeah, do more to it.
And also because most people go on Rightmove trying to find that picture perfect family home, so probably means that house is also going to get the least number of viewings. Less competition. So
in terms of HMOs, to understand if your area is worth, doing that strategy, you want to look for, because you're going to be renting each of the rooms individually, you have to, I guess, understand or know who your tenants are going to be, whether that's professionals or students or, academia, that in those kind of professions. And then obviously transport links and that kind of stuff. So once you have that understanding, you can say, okay, well, I know it's going to roughly, it will let out.
And then the other thing that I do is I go on spareroom.com and just do a test. Put in the postcode, see how many HMOs come up. The other thing that I do as well is sometimes I post on Spare Room a house in an area if I want it on the street, if I want to test what the demand is. So I'll put a picture and a house and see if people message me. And that will tell me if people are interested. Gumtree is actually a really good place to do that kind of testing, I find. Although I don't necessarily find the right type of tenants on Gumtree. But,
I've never used Gumtree. It's not. I prefer to use like Spare Room, something else.
Yeah, Open Rent is another good one.
Yeah, Open Rent is a good one. Okay, so then to wrap up, if HMO was not your strategy, what would be your property investment strategy?
Good question. Probably actually, if HMO, not as well as HMO, the next strategy that I'm going to add to my portfolio is probably commercial conversions.
Converting to residential.
Yeah, so taking commercial property where there's an over demand for right now and turning them into residential property. So if you look at the high street, I've been following the high street trend for a really long time and looking at how that's changing. And I think we are literally at that precipice where the high street people are saying it's dying, but I work on strategy and I do forward-looking things. It's dead. People just don't know it yet. So if I project forward like I do in my profession, and I do that same analysis, the high street is basically dead. We just won't know for 5 years.
But wouldn't you say that commercial conversions is going to be just as, if not more, time intensive?
Yes, so the strategy will have to be different. I'll probably do it differently. I'll probably do, as opposed to my HMO strategy, which is what I call insourcing. I figure out what I want to do. I do it within the company, hire people in to do it for me, do it inside, as opposed to getting an agent, outsourcing, pushing it off to other people. I insource. For commercial conversions, I probably do it differently. I probably won't follow the same approach.
Yeah.
But I think in terms of market opportunity, that's the area that I'm really looking at.
Yeah. I think it's also important to add just on HMOs and figuring out whether your area is worth it. The first thing that you should probably do is to actually check your local authority planning portal to understand whether they would even allow HMOs, because there's a lot of, I know where I invest is in Nottingham, and the Nottingham City Council have basically slapped what they call an Article 4 directions, which means that it's basically almost impossible to get an HMO licence now on properties, because it's just the market is too saturated. So as long as you don't have that restriction, there's nothing to stop you looking within your area and finding the right property.
I think Article 4 is a good point. Obviously that doesn't apply to me, but if you're looking at an area, that's definitely, if it's Article 4, then you can't do HMO, so scrap that. I think the other thing to consider is additional licensing. So if it's not Article 4, there might be additional licensing requirements that the local council put in place.
You need to know what constitutes an HMO as well.
Because the definition moves and shakes between councils. I think it's really, HMOs, when I talk about them being labour intensive, they're also cost intensive. For example, in Harrow, it's about, I think I pay about £3,500 to apply for an HMO license. That does not include any of the work that they might tell me I need to do in order to grant the license.
Building regulations and all that kind of stuff.
So building regulations, to be honest, in Harrow, most of the time, the one thing that they love in particular is window restrictors. So they always want even ground floor bedrooms to have window restrictors on the window to protect the tenants, which is such a pointless thing, because I've never met a tenant that said to me, this is really important. I'm on the ground floor and I need to restrict my window, but it's really important to them. So that's the type of thing that I know, so I can put it on and I can save myself some time. So different councils have their own nuances and idiosyncrasies around what they want, making sure that you know. So it's always good to touch base with the kind of HMO planning officer before you do any work, or just to find out what the council's appetite is towards HMOs in this space. There might be certain areas that they have more preference for versus other places where they are completely against HMOs being in for whatever reason. So touching base with the council is important. But the legislative framework for HMOs is actually quite complex, and I think maybe not necessarily something that people appreciate as much before they get into it.
Okay. Well, thank you so much for coming on the show. I want to come and film you again, maybe at one of your projects.
Yeah, for sure.
We can have actually,
that's
a little road
idea.
trip, a property hustle road trip to one of your projects, and actually have maybe some before and after pics and see how you kind of go through.
2020 is almost here, we'll do that.
Yeah, definitely. So for anyone that wants to sort of follow your journey or know more about HMOs, where can they reach you?
Slowmoneyclub.com. So you can go on slowmoneyclub.com and listen to the podcast, including the one with Faith, which is going to come out soon. You can find me on LinkedIn, on Instagram, on Facebook.
Is it
on
your
YouTube.
name?
My name.
Do you know what I'll do? I'll put the links to all of your social media channels in the description box below.
You can at me, Kwasi Affum.
And he's really friendly. Like, reach out to him. He's really friendly. And if anyone wants to know how to get into banking, I'm sure,
So I mentor lots of young people. We do this program. Canary Wharf, where we are now, is in Tower Hamlet. Tower Hamlet's one of the poorest boroughs in the country. Canary Wharf is one of the richest places in the world. So I do this program where we bring young people from Canary Wharf from Tower Hamlet borough schools into Canary Wharf to teach them how to do stuff. We do other stuff with young people, financial literacy within slow money. So I'm trying to help people
You're out here.
Who are interested.
Out and about. Well, thank you so much for coming on the show, and
My pleasure.
we look forward to meeting you at one of your projects in
Thank
the
you.
not so distant future.
Hopefully come as well, I should say. 2020, we have slow money events. You've been to 2, I think.
I've spoken at both,
You've spoken 2 events now. we have more next year, you know, sharing this content. And actually, 2020, we're going to have slow money training as well, which Faith is going to be part of. So
Sure will.
look out for that.
Thank you.
Thank you.
Unfortunately, that is it for this video. I hope you found it useful. If you did, give it a thumbs up and don't forget to subscribe for new content every week. Thanks so much for watching. See you next time. Bye.